Right. Well, today we're here with Mike Smith, the Chief Executive of the ANZ Group here in Sydney. Thank you very much for coming on and doing an interview with interest.co.nz. Firstly, could you explain for a New Zealand audience what ANZ's super regional strategy is? What's in it for them?
The super regional strategy is basically about giving access to people in New Zealand and Australia the opportunities that are going on in the rest of the region, predominantly Asia. I mean, Asia is now the driver of global growth, and it will be for the rest of this century and the next century as well, probably. So if you look at the growth of the economies of New Zealand and of Australia, they are going to be quite low, certainly nothing like they were pre-crisis. Therefore, the upside is basically going to come from those economies in Asia. And our strategy is really about linking those opportunities together. It's the connectivity that we can create. And it's not just Australia to China or New Zealand to Vietnam or whatever. It's also China to Vietnam and Australia to New Zealand, and that whole linkage. And of course, whilst it's very easy to understand at an institutional level, the large corporates, the multinationals, the Fronteras and whatever, they get it completely because, of course, they're dealing internationally all the time. It's also important for a small business because these markets are providing manufacturing, they're providing services, you can source things. So there's all sorts of other opportunities, and also in the consumer side, people tend to forget we still have positive migration both in New Zealand and in Australia from Asia. We have a huge amount of education flow, and that's something that I think will grow and something that we need to work on. And of course, tourism. As Asia becomes more and more affluent, as people get more and more disposable funds, or effectively disposable income, where are they going to go on holiday? New Zealand is one of the most beautiful places on earth, and you've got a massive population who want to go and explore these places. So I think it's a huge opportunity.
So can you give us some examples of what the bank would do for, let's say, a small business or a medium-sized business? How does it work?
Well, say you're a medium-sized business that you were importing, say, cars, from Europe. That's what it traditionally been. We could help put you in contact with some of the manufacturers now in China or in India or whatever. And just to give you a different idea, cars is probably a bad example because there's possibly restrictions or whatever, but that sort of thing. If you wanted to finance, say you were setting up a manufacturing business, you wanted to set it up in Cambodia or in Vietnam because that was going to be much cheaper for you. We can finance that because we can be both ends. So we look after you in New Zealand, but we also look after you in Cambodia. And I think that's the important aspect of this.
And how do you see ANZ's future in New Zealand? Because not all of ANZ National's customers may be exporters or have a lot of interest with the rest of Asia.
Of course they don't, but they're also, a lot of them will travel, and it's nice to see an ANZ sign. When you're in the middle of Phnom Penh or somewhere, oh, there's an ATM with an ANZ sign on it. That's something I recognise. It's you go into the airport in Jakarta and you just see ANZ everywhere. People just tend to go where they know and what they believe in, what they trust. So that's important. But it's also in Australia as well. That Trans-Tasman has not been as smooth a link as it should have been, and we've been putting quite a bit of effort into improving that. To me, it is crazy that if you have an account in New Zealand, say in the branch in Auckland, and then you come across to Melbourne, you want to set up an account there, you've got to go through a massive compliance process. Whereas, frankly, if we know you, in Auckland, why can't we just do it automatically? It's ridiculous. So we're improving that sort of thing. So there should be a lot of advantages.
It's been quite a while now since ANZ bought National in New Zealand. What do you see as the future for National within the wider ANZ group?
Well, I think we've got to run it far more efficiently. What we have got really is two banks where, we should have effectively one bank really, which both sets of customers can use. Because at the moment we have two of everything, so that is clearly inefficient. I mean, what I think is important is that ANZ is absolutely committed to New Zealand. It's a big business for us. It's a business we want to grow. It is one of our major domestic franchises, and we don't take that lightly. So we would like to see growth coming out of New Zealand, but of course, the economy right now is difficult. And
would it make sense then to have two brands in New Zealand, or would it be best to have one? Yeah,
the branding is something which is on the table, and we're now discussing, and we have to come to a decision at some stage fairly quickly, I think, because the brand we have, which of course is the horse, is not ours for very long. That actually belongs to Lloyds Bank, which of course is now owned by the British government almost, and so we have to do something.
Now, looking at the global financial crisis, you're in a good position to see how that's affected the bank over the last few years internationally. Do you think it's over?
I think the first phase of the global financial crisis is over. I mean, what has happened now? We've moved from a banking crisis to a sovereign debt crisis, basically. Now, what is the effect of that sovereign debt crisis? And it's really quite particular to Europe. Europe is the issue here, and I think that it's going to spill over into the banks in Europe because they will be holding a lot of this debt. And what happens if that is restructured? If there is a massive haircut on this debt, it's going to be an issue. Already Basel III, in terms of the requirements under Basel III for capital, the European banks are less capitalised than many in the world. I mean, the best capitalised banks are actually in this part of the world, in Asia Pacific. Therefore, they're going to have to raise capital anyway. If they have to take a hit for the sovereign debt that they hold as well, that's going to be even more capital. So, I think that, we're not out of this yet.
And the funding requirements for the Australian banks, and ANZ being one of the big four, is something that the ratings agencies and reserve banks and regulators have said is perhaps a vulnerability for Australia and New Zealand.
Yeah.
How comfortable are the banks or not if there is another Lehman-style crisis on markets?
Well, it doesn't even have to be a Lehman-style problem. I mean, right now, we've got the issue in Japan, which is creating huge concern and uncertainty. And the effect is that credit spreads in the credit market, global credit markets, widen. That increases the cost of funding, which flows through. I mean, I think the fact that the banks in Australia and New Zealand are still reliant on international wholesale funding is an issue. I would be the first to admit that. And certainly there's been quite a lot of talk about the need to change the tax system to encourage deposits. I mean, in Australia, you're actually encouraged to borrow through the tax system and discouraged to save, which is ludicrous. But until, there is quite a lot of talk about what should happen to actually increase the level of deposits in both countries. Now, that's well and good, but in terms of ANZ, we've decided to control our own destiny in this, and we have moved very much to raising deposits in Asia. This is where the big liquidity pools are. So we are trying to reduce our reliance on that wholesale borrowing element. And so far that's been quite successful.
Covered bonds, are they an option for ANZ?
Yeah, they are, but I mean, covered bonds, basically it's an enriched type of securitization. I actually think that that's a drug that you don't go on unless you really seriously need it. So whilst I would test the market with an issue, I wouldn't necessarily rely on it.
Just looking at regulation of the banks globally and in Australia and New Zealand, do you think the regulators have gotten it right in Australia and New Zealand on the issue of leverage, liquidity, and funding?
Well, I think you could point to the Australian and New Zealand banks and say, why did they come through the global financial crisis in good shape? And I guess most regulators would like to take the credit for that. I don't think it's just the regulators who should take the credit, because this country and New Zealand are still quite traditional in terms of their banking. The concept that when you borrow money you're expected to repay it is still very strong in New Zealand and Australia, which it isn't in the US. And if you're running a bank, that's quite a good characteristic for the population to have. But I think also the lending underwriting criteria was still quite much more traditional here in this part of the world than what we saw happening in the US and in parts of Europe, particularly the UK or Iceland and Ireland, Ireland and Spain. There's some crazy stuff.
So you're the biggest Australia and New Zealand bank. Should we have a joint regulator?
I don't necessarily think you need a joint regulator. What I would like is that the regulations conform with each other far more, because the more that they are different, the more cost is imposed, and that cost has to be passed on to your customers. So I think I don't necessarily think that I think you probably always need a national regulator of some sort. I actually quite like the system in New Zealand, in that the central bank is the regulator. I actually believe that's the right system for banks. I don't think that if you have an independent regulator, it's very easy for them to become isolated from what is going on in the market, whereas the central bank is always part of that market and therefore knows what's happening. So I actually think banks should be regulated by a central bank. I think it makes more sense. The issue, of course, is that when they created these super regulators and brought in insurance, funds management, etc., the issue is, well, should they go to the central bank? Well, I don't think they should. I think there should be a separation there.
Just looking now at ING and OnePath, that was one of the big events, at least in New Zealand and Australia, in your time. What can you talk us through that decision about deciding to buy out the rest of ING and what it meant for ANZ?
Yeah, I mean, we had a joint venture there which was very much geared, or certainly the balance was very much in the favour of ING. ING basically ran it, and they used the distribution of ANZ. But whilst with many joint ventures they sound good on paper, they don't necessarily work as well in reality. And my view was that they were actually set up, or the venture was set up for ING to eventually buy us out or take us out. And I think that the actual cooperation between the organisations was not as good as it should have been. In the crisis, of course, ING got themselves into a huge amount of trouble. This was effectively a non-core asset for them. We made an offer they couldn't refuse, and so we used the situation to our advantage. We now have to get the thing up and running and in our own mould rather than their mould, and there's quite a lot of work still to do on that.
Were you disappointed with the drama around what happened with ING in New Zealand?
The DIFRIF, yeah, I mean that was an appalling mess. However, I think the resolution of it and the way that we came to an agreement on that was, I think, fair to everybody. And indeed, we can now hopefully just put that one behind us.
Now, as the housing crisis in America has been one of the sources of the global financial crisis, could a similar fall in house prices in Australia be an issue for the biggest Australian banks and ANZ?
Yeah, I think that people don't necessarily understand the dynamics of the Australian housing market. I mean, I think the issue here is not so much in the cost of housing. I mean, if you were to look at cost of housing in somewhere like Hong Kong or Shanghai or London, central London or Manhattan, housing here is still actually pretty good value. The problem is the affordability. It's the issue between the average income and the average house price. Now that is actually getting a little better now. It's improving. House prices haven't moved as much and are fairly flat. And the Reserve Bank is absolutely all over this. They are very, very keen to ensure that there is no bubble in the housing market, and the first sign of that, they'll put up rates. So the other aspect is that the home is still the main savings medium for the average family. There is still, as I say, a growth in population here. There's still positive migration, so demand continues to outstrip supply. And I think that whilst you have very low unemployment, the affordability piece is not such a problem because people can repay the mortgages, and mortgage arrears are very, very low, and by international standards they're almost nothing.
Mike Smith, the CEO of ANZ, thank you very much.